Hi, I'm Bob Shea. I'm Chief Investment Strategist at Dynasty Financial Partners. And I just wanted to give you a little update of, or a little summary of our 2023 outlook. 2022, good to have behind us. Obviously, the drivers of last year's difficult environment were headline inflation of almost 9% and the Fed's response to it, a land war in Europe, and COVID lockdowns in China. Obviously, all of which led to tough financial markets, but more also the Fed's response to that inflation, really changing the price of money and a pretty dramatic rotation out of growth names and into value names. What are we looking for in 2023? So I've been doing this. I've been an institutional investor for over 30 years. And I have been through a number of cycles, but not many regime changes. And I think there are several cohorts of investors that haven't navigated a regime change. And a regime change, I mean, going from a deflationary boom into a new quadrant of an inflationary boom, where we're going from low interest rates and tight credit spreads, quantitative easing, into an inflationary or more inflationary environment. With wider credit spreads and making the macro environment more challenging to navigate. In our big outlook piece, we did talks to what's going on in the markets early on. Well, I think this is going to be a difficult environment over the next several years. We could see the market having a good year. Last year with the S&P down almost 20%, high yield credit trading at 85 cents in the dollar, and us being in a third year of a presidential cycle, all project quite positively for markets, risk markets, 12 months into the future. And in our piece, we wrote for Q1 2023 in particular, too many bears on the bow of the boat, that folks' positioning and sentiment was just too dour. That some of the real beatdown in those mega cap technology names, which we do believe is the beginning of a very large and broad rotation away from just were sold too hard into the quarter end or into year end, and that we would see a broad bounce in Q1, which has played out nicely. What we see going forward is I think we're in the camp that inflation is coming down nicely, but probably plateaus higher. We think that part of this regime change is a rotation into value from growth. One of the active decisions we made here was to let growth bounce and now tilt slightly away into value. And we think that rest of world valuations, as well as the outlook going forward, is really pretty nice. They performed way better than they should have last year, mostly because they started at lower valuations. But we like value over growth. We like rest of world within the framework of being, U.S. home investors. And we like, last year's credit markets or fixed income markets. We like a more active approach in the fixed income space to take advantage of some of the opportunities that higher interest rates have created. So hopefully that was helpful. A little outlook here from Dynasty Financial Partners. Thank you.